You've been trading for months, maybe years now, and every time you look at your account balance, it's almost exactly where it started. Not down significantly. Not up meaningfully. Just there, stuck. And if this sounds familiar, I need you to understand something crucial right now. You're not failing because you lack intelligence, discipline, or even a good strategy. You're stuck because your mind has become your silent enemy, and it's winning every single day without you even realizing it. Let me paint you a picture. Imagine waking up at 6 in the morning, excited, ready to trade. You've studied the charts the night before. You know your setups. You've got your risk management dialed in, or so you think. The market opens, and within the first hour, you spot a beautiful setup. Everything aligns. You enter the trade, feeling confident. The position moves in your favor immediately. $10, $20, $50. Your heart starts racing. You watch the screen, and suddenly, a small pullback happens. Just a normal retracement, nothing unusual. But your stomach tightens. Your mind whispers. What if it reverses? What if you give it all back? So you close the trade. You lock in that $50 gain, and for a moment, you feel relief. Safe. Smart, even. But then the trade continues without you. It reaches the target you originally planned for, $150, maybe $200. You missed it. And now you feel something else entirely: regret. Frustration. A voice inside your head says, you should have held. Why did you panic? So you look for another setup, trying to make up for what you just lost by exiting early. You find something that looks decent, maybe not perfect, but close enough. You enter. This time, the trade goes against you immediately. Small at first. Then larger. You think about cutting the loss, but now your mind plays a different game. It says, just wait. It'll come back. It always does. So you hold, and hold. The loss grows. Eventually, you close it frustrated, exhausted, and now down more than the 50 you made earlier. By the end of the day, your account is almost exactly where it started. By the end of the week, the same. By the end of the month, still flat. And this cycle repeats over and over until trading stops feeling like opportunity and starts feeling like punishment. This is the break-even trap. And what makes it so dangerous, so insidious, is that it doesn't announce itself with alarm bells or catastrophic losses. It hides behind the illusion of stability. You tell yourself, at least I'm not losing. And that thought, that small comfort, becomes the cage that keeps you stuck for years. Most traders think the problem is their strategy. They spend hours, sometimes days, tweaking indicators, adjusting time frames, testing new entry techniques. They convince themselves that if they just find the right combination, the right system, everything will click. But here's the truth they don't want to hear. The strategy was never the problem. You are. Or more specifically, the way your brain responds to risk, uncertainty, and emotional discomfort is the problem. Let me explain why this happens. Your brain, this incredible organ that allows you to think, reason, and analyze, was not designed for trading. It was designed for survival. Thousands of years ago, when your ancestors faced danger in the form of predators or hostile environments, the brain developed mechanisms to keep them alive. Avoid immediate pain. Seek instant gratification. React quickly to threats. These instincts kept humans alive in a world where hesitation meant death. But in trading, these same instincts become your worst enemy. When you see a small loss, your brain doesn't interpret it as part of a probabilistic system. It interprets it as a threat, a danger, something to avoid immediately. So you close the trade early, cut your winners short, or refuse to take the loss at all, hoping it reverses. Every decision is driven by an ancient survival mechanism that has no place in a modern probabilistic environment. And it's not just loss aversion. There's also the fear of missing out, FOMO, which grips you after you've closed a winning trade too early and watched it run without you. Your brain interprets that missed opportunity as a threat to your potential gain, creating anxiety and urgency. So you chase the next trade, entering at suboptimal levels, abandoning your rules, and acting on impulse rather than strategy. You're not trading a system anymore. You're managing your emotions, desperately trying to feel okay, trying to avoid the discomfort that comes with uncertainty. Then, there's confirmation bias. After a few losses, you start looking for evidence that supports your current belief about the market. If you think the trend is reversing, you'll find reasons to justify that view, ignoring all the signals that contradict it. Your brain doesn't want to be wrong, because being wrong feels like failure, and failure triggers that same ancient threat response. So you hold on to losing trades longer than you should, hoping, praying, that the market will prove you right. And let's talk about anchoring. You enter a trade, and the price hits a certain level. That level becomes your reference point, your anchor. Even if the market conditions change, even if your original thesis is invalidated, your mind keeps pulling you back to that anchor. You think, it was at this price before, so it should come back. But the market doesn't care about your anchor. It doesn't care about your pain, your hope, or your need to be right. It simply moves based on supply and demand, and while you're stuck anchored to a price that no longer matters, your capital slowly erodes. The most painful part of all this is that you know what you should do. You've read the books. You've watched the videos. You understand risk management, position sizing, and the importance of following a system. Intellectually, you know. But when the trade is live, when real money is on the line, all that knowledge disappears. Your hands shake. Your heart races. Your mind floods with fear, doubt, and a desperate need to feel safe. And in that moment, all your preparation, all your knowledge, becomes useless because your emotions have hijacked your decision-making process. Let me tell you about a trader I once knew. We'll call him Marcus. Marcus had been trading for 3 years. He wasn't losing money dramatically, but he wasn't making any either. His account hovered around the same balance, month after month. He had a decent strategy, one that had been back-tested and proven to work. But Marcus could never seem to execute it consistently. Every time he took a trade, something would go wrong. He'd exit too early out of fear. He'd hold losers too long out of hope. He'd overtrade after a small loss, trying to make it back quickly. One day, Marcus sat down and reviewed his trading journal. Not the wins and losses, but the emotions he felt during each trade. And what he discovered shocked him. Almost every decision he made was driven by one thing: the need to feel safe. He wasn't trying to maximize his edge or follow his system. He was trying to avoid emotional discomfort. When a trade moved against him, he felt anxious. So he either closed it immediately to stop the pain or held it longer, hoping it would reverse so he wouldn't have to admit he was wrong. When a trade moved in his favor, he felt the urge to lock in profits quickly, not because it made strategic sense, but because taking the money off the table made him feel secure. Marcus realized something profound in that moment. He wasn't trading the market. He was trading his emotions. And as long as he continued to prioritize feeling safe over executing his system, he would remain stuck in the break, even trap forever. This realization is the first step toward change, but it's also the hardest. Because admitting that you're the problem, that your own mind is sabotaging you, requires brutal honesty. It's easier to blame the market, the news, the whales, or your broker. But those excuses keep you comfortable, and comfort is the very thing that's destroying your trading career. Here's what most break, even traders, don't understand: every time you prioritize emotional relief over correct execution, you're training your brain to repeat that behavior. It becomes a loop. You feel discomfort. You act to reduce that discomfort. You feel temporary relief. Your brain releases a small hit of dopamine, rewarding you for avoiding pain. And that reward reinforces the behavior, making it more likely you'll do the same thing next time. This is why breaking even feels oddly satisfying. You didn't lose money, so your brain interprets that as success. You survived. You're okay. But survival is not the goal in trading. Growth is. And you cannot grow if every decision is designed to keep you emotionally neutral. Think about it this way. Imagine you're climbing a mountain. Break. Even traders are the ones who keep stopping every few steps to rest, afraid that if they push forward, they might slip and fall. They stay in the safe zone, never venturing too far from where they started. And because of that, they never reach the summit. They spend years on the same section of the mountain, convincing themselves that at least they haven't fallen, not realizing that standing still in harsh weather is its own form of failure. Profitable traders, on the other hand, accept that climbing is uncomfortable. They know there will be moments where they slip, where they feel uncertain, where the path ahead seems unclear. But they keep moving. They don't stop to rest every time they feel a little tired or scared. They trust the process, trust their training, and accept that discomfort is part of the journey. This mindset shift is everything. It's the difference between mediocrity and mastery. And it doesn't happen overnight. It requires conscious effort, daily practice, and a willingness to confront the parts of yourself you've been avoiding. So how do you make this shift? How do you stop trading your emotions and start trading your system? It starts with awareness. You need to become intimately familiar with your emotional triggers. What situations make you anxious? What causes you to deviate from your plan? Is it watching the price move against you? Is it seeing a trade run without you after you've exited? Is it a string of small losses that makes you feel incompetent? Once you identify your triggers, you need to create rules that protect you from yourself. This is where most traders resist because it feels restrictive. They want freedom, flexibility, the ability to adapt in the moment. But what they don't realize is that freedom without structure is chaos. And chaos in trading leads to blown accounts and broken confidence. Your rules should be simple, clear, and non-negotiable. If your system says the stop loss is here, it's here. No exceptions. No, just a little more room. No, I'll watch it closely and exit manually if it gets worse. The stop loss is there to protect you from your own inability to act rationally under pressure. Respect it. The same goes for profit targets. If your system says let the trade run to this level, then let it run. Don't close it early because you're scared of giving back profits. That fear is your survival instinct talking, and it's lying to you. It's telling you that locking in small gains is safe. But what it's really doing is preventing you from ever compounding meaningful growth. Position sizing is another critical area where emotions interfere. Even traders often reduce their position size after a loss because they're scared. Or they increase it after a win because they're feeling confident. Both behaviors are emotional reactions, not strategic decisions. Your position size should be determined by your risk management rules, period. Not by how you feel that day. Now, here's where it gets difficult. Even with rules in place, your brain will fight you. It will whisper doubts. It will create urgent feelings of fear or greed. It will tempt you to, just this once, break your own rules because the situation feels different. And if you give in, even once, you've reinforced the old pattern. You've told your brain that the rules are optional, that emotions can override logic. This is why journaling is so important. Not just tracking your trades, but tracking your thoughts and feelings during those trades. Write down what you felt when you entered. What you felt when the trade moved against you. What you felt when you exited, whether it was at your target, your stop, or somewhere in between. Over time, patterns will emerge. You'll see the same emotional reactions causing the same mistakes. And that awareness is what allows you to interrupt the cycle. Let me share another story. There was a trader named Sarah. She had been stuck at break, even for nearly 2 years. She knew her strategy worked because she had seen others succeed with it. But every time she tried to execute it herself, something went wrong. She'd close winners early. She'd let losers run. She'd skip trades that met all her criteria because they felt risky. One day, Sarah decided to do something radical. She committed to trading her system exactly as written for 30 days, no exceptions. She wrote her rules on a piece of paper and taped it to her monitor. Before every trade, she read them out loud. And whenever she felt the urge to deviate, she paused, took 3 deep breaths, and reminded herself that her feelings were not facts. The first week was brutal. Her account dipped slightly because a few trades hit their stops. Her mind screamed at her to adjust, to stop following the rules, to protect herself. But she didn't. She kept going. By the second week, something started to shift. The trades that ran to target began to outweigh the ones that didn't. Her account started to grow, not dramatically, but steadily. By the end of 30 days, Sarah had made more progress than she had in the previous 2 years combined. What changed? Not her strategy. Not the market. Sarah changed. She stopped letting her emotions dictate her actions. She stopped seeking comfort and started seeking execution. And that shift, that internal transformation, unlocked the profitability that had been there all along, hidden beneath layers of fear and self-sabotage. But here's the thing most people won't tell you. This journey is not linear. There will be days where you follow your rules perfectly and still lose. There will be weeks where it feels like nothing is working. And in those moments, your old patterns will try to resurface. The voice will come back, whispering that maybe you should tweak something, try something different, protect yourself. This is the test. This is where most traders fail. They commit to change, see some initial success, and then hit a rough patch. Instead of trusting the process, they panic and revert to old habits. And just like that, they're back at break, even, wondering why nothing ever works. The traders who break through are the ones who understand that consistency compounds. It's not about being perfect. It's about being disciplined more often than not. It's about recognizing when you've deviated, forgiving yourself, and getting back on track without spiraling into self-criticism or revenge trading. Revenge trading is another trap that keeps people stuck. You take a loss and immediately, you feel this intense need to make it back. So you jump into the next trade without proper analysis, without waiting for your setup, driven purely by emotion. And more often than not, that trade loses too, compounding the damage. The antidote to revenge trading is simple but difficult: do nothing. When you feel that urge to jump back in immediately after a loss, step away. Close the charts. Go for a walk. Do anything except trade. Give your emotions time to settle. Give your rational mind time to regain control. The market will be there tomorrow. The opportunities will return. But if you blow your account chasing losses, there is no tomorrow. Overtrading is closely related. It happens when you're bored, when you're trying to force the market to give you what you think you deserve, or when you're simply addicted to the stimulation that trading provides. Every click, every entry, every exit gives your brain a small hit of dopamine. And like any addiction, you need more and more to feel satisfied. The solution is to trade less. I know that sounds counterintuitive. You think more trades mean more opportunities, more chances to make money. But in reality, more trades mean more opportunities to make mistakes, to act on impulse, to let emotions take over. The best traders are patient. They wait for high probability setups that align with their system, and they ignore everything else. This patience is excruciating for break-even traders because sitting on your hands while the market moves feels like missing out. But missing out on mediocre trades is not a loss. It's discipline. It's you protecting your capital and your mental energy for the trades that actually matter. Now let's talk about identity. This might be the most overlooked aspect of trading psychology, but it's arguably the most important. Break-even traders tie their self-worth to their trading results. When they win, they feel smart, capable, validated. When they lose, they feel stupid, incompetent, like a failure. This emotional roller coaster is exhausting, and it makes consistent execution nearly impossible. Profitable traders separate their identity from their results. They understand that a losing trade does not mean they are a loser. It means probability played out in a way that didn't favor them this time. Similarly, a winning trade doesn't make them a genius. It means their edge worked in that particular instance. This detachment allows them to stay emotionally stable regardless of outcomes, which in turn allows them to execute consistently. If you find yourself feeling devastated after a loss or euphoric after a win, that's a red flag. It means you're too attached. You're making it personal when it should be mechanical. Trading is a business, and in business you have expenses. Losses are your expenses. They're the cost of being in the game. Accept them, learn from them, and move on. Let me give you a framework that might help. Think of yourself not as a trader, but as an operator. An operator doesn't react. An operator executes. An operator follows the manual, trusts the system, and measures success by adherence to process, not by immediate outcomes. When you shift your identity from someone trying to make money to someone executing a proven system, everything changes. The pressure lifts, the fear diminishes. You stop worrying about every tick and start focusing on whether you're doing your job correctly. And your job is simple: follow the rules. That's it. Enter when your system says enter. Exit when your system says exit. Manage risk according to your plan. Do this consistently, and over time, profitability becomes inevitable. It's not magic. It's math. It's probability. But it only works if you let it work, and most traders never do, because they interfere with their own systems. Here's a hard truth: the market doesn't owe you anything. It doesn't care about your bills, your goals, or your dreams. It doesn't care that you've been working hard or that you deserve a win. The market simply is. It moves based on the collective actions of millions of participants, and your job is not to control it, but to respond to it intelligently. Break. Even traders try to control the market. They try to predict every move, avoid every loss, capture every gain. And when the market doesn't cooperate, they feel frustrated, betrayed even. Profitable traders, on the other hand, accept that the market is uncontrollable. They focus on what they can control: their preparation, their execution, their risk management, and their emotional state. This acceptance is liberating. When you stop trying to be right all the time, when you stop needing the market to validate you, trading becomes simpler. You execute your system, you accept the outcomes, and you trust that over time, your edge will produce results. But trust is difficult when you've been stuck for so long. You've tried things before, and they didn't work. You've followed systems that failed. You've been disciplined, and still, nothing changed. So why should you trust now? The answer is this: you probably weren't as consistent as you think you were. Most traders believe they're following their system when in reality, they're following it most of the time, but deviating in critical moments. And those deviations, those small emotional interferences, are enough to erase any edge the system might have. If you truly, genuinely, without exception, follow a well-designed system for a statistically significant number of trades, you will see results. But most traders never reach that point. They follow the system until it becomes uncomfortable, and then they adjust, they tweak, they modify, and they never give the system a fair chance to prove itself. So if you're serious about escaping break-even, here's what you need to do. Choose one system. Not three, not five, one. Make sure it's been tested, either by you through backtesting, or by others who've had success with it. Write down the rules clearly, leaving no room for interpretation. And then commit to executing those rules for at least 50 trades, no exceptions. Don't evaluate performance after 10 trades. Don't panic after a losing streak. Don't get overconfident after a winning streak. Just execute. Track your adherence to the rules, not just your P&L. At the end of 50 trades, review. Did you follow the system consistently? If yes, and the results are still flat, then maybe the system needs adjustment. But if you deviated even a few times, you haven't actually tested the system. You've tested your emotions. This process is uncomfortable because it forces you to confront your own inconsistency. It's much easier to blame the system, the market, or external factors. But if you're truly committed to growth, you'll embrace this discomfort. You'll accept that the problem has been you, and you'll do the work required to change. And the work is not complicated. It's simple. But simple is not easy. Waking up every day and choosing discipline over comfort is hard. Sitting through a drawdown without panicking is hard. Letting a winner run when every fiber of your being wants to lock in profits is hard. But hard is where growth happens. Hard is where mediocrity transforms into mastery. There's a concept in psychology called delayed gratification. It's the ability to resist the temptation of an immediate reward in favor of a later, more valuable reward. This is the essence of profitable trading. You delay the gratification of closing a trade early to allow the bigger reward to materialize. You delay the comfort of avoiding a loss to honor your stop and protect your capital. Break-even traders fail at delayed gratification. They want to feel good now. They want relief now. They want validation now. And that need for immediate emotional satisfaction destroys their long-term potential. But you can train this skill. Start small. In your daily life, practice delaying gratification. Wait an extra hour before checking social media. Skip the impulse purchase. Finish the task before taking a break. These small acts of discipline train your brain to tolerate discomfort, and that skill transfers directly to trading. Let's also address something that doesn't get talked about enough: the loneliness of trading. When you're stuck at break even, it feels isolating. You see other traders posting wins, sharing success stories, and you feel left behind. You start to wonder if something is fundamentally wrong with you. But here's the truth: most of those traders are either lying, cherry-picking their results, or also struggling behind the scenes. Trading is hard for everyone. The difference is that profitable traders stopped comparing themselves to others and started focusing inward. They stopped seeking external validation and started trusting their own process. You don't need permission to succeed. You don't need someone to tell you you're good enough. You need to commit, execute, and trust. That's it. Everything else is noise. And when you finally break through, when you string together consistent winning months, something profound happens. It's not just about the money. It's about the person you've become. You've proven to yourself that you can control your impulses, that you can endure discomfort, that you can change. That confidence, that self-trust, extends beyond trading into every area of your life. So if you're stuck at break, even right now, I want you to hear this: you're not broken. You're not incapable. You're just early in the process. The fact that you're here, seeking answers, means you care. And if you care enough to change, if you're willing to confront your own patterns, to sit with discomfort, to trust a system even when it's hard, then profitability is not a question of if, but when. Stop looking for the perfect strategy. Stop tweaking indicators. Stop blaming the market. Look inward. Identify your emotional triggers. Build rules that protect you from yourself. Execute those rules without exception. Journal your progress. Be patient with yourself, but ruthless with your adherence to process. Trading psychology is why you're stuck, but it's also why you'll break free. Because once you understand your mind, once you learn to work with it instead of against it, everything changes. The market stops feeling like an enemy and starts feeling like an opportunity. Losses stop feeling like failures and start feeling like feedback. And that flat account balance finally, beautifully, begins to grow